First off, what's up with this dragon lore?
The idea of the dragon in our ecosystem is there are some treasuries that went through a successful fundraising event, but then the treasuries were not used or were not fully used, and therefore they were sitting and not really generating any extra capital or not contributing to the ecosystem in general.
What is the vision here and how does it build on everything that we've just talked about?
Well, the idea is that we all recognize the problem for the long-term Ethereum sustainability, like 10, 20 years down the line, how we're going to sustainably fund Ethereum. And one of the problems is that
Welcome to the Allo Capital podcast. This season, we are summoning Allo Capital, a new spinout from Gitcoin that's designed to build the capital allocation layer of the tokenized internet. I think that there's big upside here. Capital allocation is a multi-trillion-dollar design space. NGOs, governments, DAOs, VCs all have to allocate capital to survive and thrive, but it's a place where we must start small. Every time you spend money, you are allocating capital. We are threading a through line, partnering with builders, dreamers, researchers, and funders to figure out what on-chain capital allocation will look like building it on-chain. If you want to learn more, visit our website at allo.capital, where you can download the Allo books for free, play with some of our dApps, join the Telegram, or participate in the DAO. Today, we are continuing our discussion of the tectonic shifts in the Ethereum public goods funding ecosystem. If you've been around for a while, you know that this is an important thing in the Ethereum ecosystem. How do we fund open source software, education, and other public goods in the Ethereum community? And my guests today, Artem and Ben from Octant, are here to talk about Octant's play. Octant just released Octant 2.0. And Octant is focused on sustainable yield, creating sustainable public goods funding ecosystem. So they've built this really interesting ecosystem around the originally Golem, but now Octant, and have been sustainably funding their ecosystems, public goods, through a series of rounds that are funded by yield, which I think is cool. So we were talking with Artem, who is head of engineering at Octant, and Ben, who is head of product at Octant, and I'm excited to have them on the podcast today to talk about on-chain capital allocation and what Ethereum public goods funding is going to look like in the next cycle. Enjoy. Glad to have you guys back. So I think we did an episode a little while ago about Octant, and we're here to talk about Octant 2.0. So let's dive into that. What is Octant 2.0 and how does it build on the foundation y'all built on Octant 1.0?
so Octant 2.0 is the next iteration of Octant development. So Octant 1 is the application that allows people to vote on funding projects in Ethereum ecosystem. What we're doing with Octant 2.0, we essentially expanding this model that allows people to recreate the same sustainable funding streams that we have in Octant 1 using new financial primitives, building on top of DeFi Lego blocks that already exist in the space. We created a protocol essentially or system that allows people to plug in the capital in the same way that Golem Foundation plugs ETH into Ethereum proof of stake that generates sustainable yield that then is funneled into different allocation mechanisms. So essentially, this is a model that allows other projects in the space, similar to Golem Foundation with treasuries, to reuse the system to create their own mechanisms to fund sustainably their community and their ecosystems.
Yeah, and I think just to add to that, finally, like the core of what we're doing is saying we did it with staking. There's a gazillion different yield generating strategies in the Ethereum ecosystem, and we should use those to fund our communities and our ecosystems. And that, at its simplest, is kind of recreating the premise of what we did with V1 on a much larger scale.
And essentially, like there are mechanisms that allow people to sustainably generate revenue streams, not only staking, but also it kind of creates one pipeline that operates on chain and flowing from this new DeFi primitives towards different allocation mechanisms that people can choose from. And on top of this, there's like applications that people can use and set up specifically for their communities.
When you describe it as a sustainable funding machine, when you describe Octant as a sustainable funding machine, what does that mean in practice?
That's a very good question. I think in general, this is one of the main problems in our space in terms of funding both public goods and community goods is how to make this sustainable. The reason we created Octant Sustainable is because we have a treasury that we can plug in to create sustainable yield, right? So no matter what happens, as soon as the Ethereum keeps growing, we can sustainably create yield and sustainably fund projects into perpetuity, essentially. And one of the problems that we're facing right now in Ethereum in general is that we have the Ethereum Foundation, we have some other bodies that are contributing to funding open source software, Ethereum clients, protocol upgrades, but those entities have limited capabilities for 10, 20, 30 years forward. So because we have the treasuries in our ecosystems and because we have a lot of money, we're trying to create a mechanism that not only will use new allocation mechanisms, but also will create this sustainable by sitting on the end use capital and plug it in as into DeFi mechanisms.
It feels like a big innovation here is that public goods funding doesn't need to be net negative for your treasury. It is built on top of the yield that you're creating, and maybe that creates opportunities to do this in perpetually. But also, I think it maybe it makes it more palpable to people who are delegates in these ecosystems to fund public goods because they don't feel like they're drawing down the treasury to do it. Is that the innovation here?
I think it's this idea that like, and one things we've heard from DAOs and treasury managers a lot is that it's really sent like treasury spend down is real. And the more that price drops or goes up, that fluctuates and kind of goes along with treasury spend down. And it becomes harder and harder to make consistent high quality decisions on what should get funded when you are operating from a pool of limited capital. And fundamentally what we're saying is you work in the Ethereum ecosystem, you have a treasury of X millions of dollars, or X hundreds of thousands of ETH. You should just be funding stuff with money that you earn, and your principal should stay the same. And effectively, what that means, the market goes up, your funding goes farther. If the market goes down, the first thing that goes is grant funding. And in our system, at least that way, like you will still have earmarked sustainable yield for grant funding for your ecosystem. And it's not like, okay, so the market has gone down and you are going to pull all funding from your ecosystem. Really, what we want to do is make those decisions on how ecosystems allocate capital easier at the core level of them just knowing that they're not drawing down their principal.
What we observed in the last years, well, in the cryptosphere and in general, what we observe in the public goods funding and impact funding is that donation-based funding is not sustainable long term, but the capital-based funding is sustainable long term. That's why there are those endowment funds where people plug in the capital that generates yield sustainably, and then people draw from the yield and fund whatever the goal they have to fund. The thing with the sustainability in our space is that a lot of this treasuries in general is capital is being used, and the time is money. Therefore, if we create this more cost efficient and optimize and automated tools, meaning when you plug them once and then you turn your attention to something else, this capital keeps working and generating yield in the same way that works for individuals right now. But the problem is that doesn't really benefit the larger public. And so in this way, like we are kind of trying to create a balance where we both fund ecosystems that also allow the system to benefit individuals. So it's like balance between individual financial empowerment and ecosystem growth.
I'm curious if you could take us into Dragon Vaults next in the Dragon router. First off, what's up with this Dragon lore, and how do those two things specifically work?
So the story with the dragon term goes back into when Golem Foundation was starting Octant, and the dragons are these creatures that sit on a pile of gold, and they don't really like getting out of this pile of gold. They want to keep sitting on the pile of gold. So the idea of the dragon in our ecosystem is there are some treasuries that went through a successful fundraising event, but then the treasuries were not used or were not fully used, and therefore they were sitting and not really generating any extra capital or not contributing to the ecosystem in general. So that's why we're expanding this notion to other treasuries, significant treasuries. And the whole idea of the Dragon Vaults is financial primitives that allow treasury owners or people who sit on significant capital plug this capital into DeFi ERC-4626 vaults that automatically connect to safe wallets, because that's where most of the capital is sitting. So it's like an application that is connected to safe that you open your safe and you create different Dragon vaults with different types of capitals that then allows you to decide where the yield goes directly from the treasury. And this is like one of the models. Another model also allows to contribute not only one party but multiple parties, but the funding still goes into a Dragon router, a splitting contract, and allocation mechanism. And I can talk a little bit more about that. But then, if you want to add anything else about the vaults, feel free to jump in.
Yeah, I think so these vaults like Artem was alluding to, they're going to be the first launched product. We're coming up from that. We're quite excited, and we're in the next couple months, there's going to be some announcements about experiments we're running with them. But the idea behind the vault is fundamentally the first piece of that capital accumulation connected to allocation or distribution methods. I know that in the past we've spoken about Octant as the connective tissue between accumulation and allocation, and that we don't necessarily have a strong preference for like what people are using to accumulate capital or what people are using to allocate capital. We just want to make certain that those decisions are efficient, sustainable, and like beneficial for the ecosystem. So the vault is the first step in that direction.
It's like a new kind of region DeFi primitives that draws from already existing experience in the systems and the tools and the standards, specifically the vaults that have been built for individuals or groups to generate yield, but it directly plugs it into more regenerative financial space.
I mean, it's kind of interesting to see how you develop the system to be modular and sort of plug and play and match different. I'm assuming you can match different routers and vaults together. Is that right?
Generally, yes. Going deeper, the way it works, there's going to be different strategies that you can plug into a vault, or you can just deploy a strategy per se. But the main idea here is that the strategies can be self-sustaining on their own, meaning like a developer comes up with an idea and creates a strategy that will generate the yield, and the yield will go to fund sustainably an ecosystem. Or a strategy can be simply plugging into existing DeFi protocol. For example, if somebody has already stake in Lido or Rocket Pool or some lending protocols, what they should be able to do is to take this receipt token that they got from this yield generating protocol, plug it into Octant, and decide how much they want to donate or funnel into the community funding, into public goods funding, into impact funding.
Are you all going outside of the Octant Foundation to ask others for capital to fund their ecosystems?
Again, I'm gonna kind of make a call back to what I just said about that infrastructure between accumulation and allocation. We know that just about every organization that is sitting on a treasury in the past few years is doing some sort of capital accumulation and some sort of allocation. They are often disconnected or inefficient or struggle with governance, whatever it may be. And our vision for Octant V2 is that we are basically able to provide that infrastructure to make that connection more effective, more efficient. So that means that like any dragon, as we call them, who is managing their treasury or maybe not managing their treasury right now, but also has some sort of funding initiative for their community, whether that's strategic investments, grants, retro funding, stream funding, whatever it is, we want to ensure that the way that they are accumulating and allocating is efficiently connected. So I guess to put it more succinctly, yes, we are looking to bring what we've done with Octant V1 to the rest of the Ethereum ecosystem.
Yeah, I think the point here, it's like we're going outside of the Golem Foundation Treasury, but we are basically creating infrastructure, right? We're creating the tools that are on chain and people can deploy the capital, and we're just hand holding them through this experience, and also learning with the different foundations and projects and DAOs that exist in the space about what they need and how they actually want to use the system. Because at the end of the day, one way is to sustainably generate yield, but also some treasuries can just take part of their budget and directly deploy into funding what's important. And in the ideal world, is going to create this network of different nodes, which flows from different DeFi protocols into this DeFi vaults, Dragon vaults that generate sustainable yield, and then they funnel into different allocation mechanisms, like a nucleation system in a way.
Y'all be successful outside of the Golem Foundation. I think there's lots of other places that have large treasuries, and it'd be great to start seeing this upward spiral of funding what matters to these ecosystems in a more decentralized and sustainable way, but also funding what matters upstream to Ethereum, open source the world, stuff like that. I think there's really an opportunity to create an Ethereum as a shelling point for funding what matters to humanity. And this feels like a key piece of tech for it because there's the money and there's the technology to distribute it. So yeah, hope to see it successful. Let's see. So I think that brings me next to the Ethereum Sustainability Fund. I think that you guys have teased this a little bit. What is the vision here, and how does it build on everything that we've just talked about?
Well, the idea is that we all recognize the problem for the long-term Ethereum sustainability, like 10, 20 years down the line, how we're going to sustainably fund Ethereum. And one of the problems is that the Ethereum Foundation, can run out of funds at some point in the future. And the second problem is that how do we create a system that will not allow some actors to capture the governance and funding and development of Ethereum long term. So Ethereum Sustainability Fund is something we're still working on. So it's not have been fully fledged, but in general, idea is that it kind of acts as an unrestricted endowment fund that different parties contribute to in certain ways. So there are mechanisms that we're still working on how exactly this is going to be. But the idea is that from all those different vaults, funds need to be flowing into something that should create more sustainability for Ethereum long term. So we push forward for the next release, but the general idea is to create something that will allow to contribute more for long term sustainability of Ethereum. And the fact that right now there are a lot of protocols and product that really run on Ethereum to capture value to generate revenue, but there is no really this layer that is going to fund the open source software, the clients, sustainable long term. And usually people don't really pay attention to that until it's too late.
Yeah, I mean, I can't wait to see it come together. Feels like it would be a sort of like accentuation of what you guys are doing already. What is your vision for Octant in the emerging network state, pop-up village, crypto native hubs like Zuzalu, that whole space? Do you guys have something that you're thinking of there?
There haven't been too many discussions about it directly. I think we view those like any organization, like any space, and I think this ties back to the question about the ESF as well to a degree, but like anything that moves Ethereum forward, or actually let me rephrase that. The phrase that is often spoken about internally as far as like what we are building. It's the aggregation, it's a tool for aggregating community preferences and funding what matters to move us forward. And I think for us, those pop-up states, emerging network states, whatever we want to call them, if they are the types of things that are viewed as incredibly impactful and powerful for the Ethereum community moving forward, we want to be funding them. We want the community to decide. We don't want that to be us. I think that's one of the visions of the ESF, is to say that, like, okay, we have this tool. We are aggregating funding from across Ethereum, and it's earmarked for deployment for things that make us all better, things that improve the infrastructure, improve the community, improve the culture, improve the tech of Ethereum as a whole. Let's let the community choose what to fund. I would say beyond that, we have not really discussed how we might directly interact with Zuzalu or some of the other network states. But we do know that they are a core part of this kind of Ethereum puzzle.
I think it's also about focus, right? So if you look at the history of Octant V1 Epochs, that's how we call our funding rounds. They happen every 3 months. That we're trying to focus on one thing at a time. And recently, we've been moving more towards specifically Ethereum focused funding. So we just finished Epoch 8, I think, and we distribute around 460 ETH. And mostly the projects are Solidity and Viper and Altitude and other projects that generally benefit Ethereum. And these emerging network states, they are important and they are using Ethereum to experiment with, but it requires more focus to see if we can impact that. So if at some point in the future there will be like an interest to focus on specific area of research or development in network state, that's kind of like interesting. But right now we're moving more towards uh, Ethereum funding. And also the question is how do we measure impact, how it benefits Ethereum community, how it also benefits the society where the network state is happening. So this is kind of like all these questions that we need to be asking ourselves. And whenever we decide to run a themed epoch, we're essentially given a pool of focused funding to certain area, and at the same time you're always not giving it to somebody else, right? So it requires curation and decision making.
Yeah. That's one thing that we've seen a lot is that there's a lot of sort of subjectiveness in what public goods you want to fund. And it really depends on the political economy of the delegates and the people who are in power there. And um, creating a legitimate but fair but also practical system feels challenging. So maybe that's where modularity and different permutations of allocation strategies for different communities comes in.
And that's really one of the things that we like I think Kevin, what you just touched on has always been one of our like core design spaces, right? It's like, how do we build that modular tool that fits everyone's use case, or rather can provide some value to everyone's use case? There's a world where like we're building a regen app or a kind of a front end tool that looks a little bit more like Octant V1 with the Octant V2 accumulation methodology behind it. And there's a world where like we use that super successfully, and some other dragons say, actually, we just want to use the same front end we've been using for the past 4 years, and we're just going to plug in an allocation strategy to it, or sorry, an accumulation strategy to it. And I think that there is this this methodology of like, well, some dragons may want to make unilateral decisions for what gets funded in their communities, and others may want to engage their community to a really big degree, or maybe there's different types of rounds where they do different things. And one of the things that's been really interesting for us with Octant V1 moving into V2 is that we have all of these different use cases, all of these different experiences, epochs, community funding rounds, partnership rounds, like all of these different ways that we have deployed capital in V1 that we have learned and are trying to thus improve and make better for the rest of the ecosystem, because we know that it's not one size fits all. We know that every organization, every dragon is going to have a very specific set of requirements, maybe at the like high level governance level, or maybe at a per round level. And what we want to do is give them the tools they need to do that as effectively and efficiently as possible.
Yeah, I love that. Ben, what is the most exciting part of the roadmap for Octant 2.0 from your perspective, and what should the Ethereum community actively be watching for?
Personally, I'm most excited for the ESF, but that's going to be a little bit of ways away. I think that's kind of our pie in the sky, what we really want to see come to fruition.
The Sustainability Fund,
The
ESF.
sustainability plan, yes, sorry. In the short term, over the rest of this year, I'm extremely excited to see the vaults go live. I'm extremely excited to see how we run experiments with them, the different types of accumulation and funding we can do through them. But more than that, I'm interested in knowing or seeing how various organizations take those vaults and what they do with them. I think we are effectively giving people a Lego block in this space, and you can do a whole lot of things with that. So that's for me what I'm most excited for, is just to learn from what people really want to do and what they use the tech for.
Great. Artem, how about you on the technology side?
Well, we've been going deep and looking through so many different mechanisms. I think one of the things that really excites me is some kind of combination of funding and predictive decision making. So right now, a lot of people research and look into prediction markets. one of the tools that we have on our roadmap for longer is called allocation bonds. This is a mechanism that essentially rewards people for their contribution for funding. So right now, in Octant V1 and later in Octant V2, you are able to plug in your token and then use some of the yield that is generated and shared from the Dragon Vaults to the users. That's the part of individual financial empowerment that is quite important to create all the system together. But part of this future roadmap is allocation bonds that reward people for trying to predict what kind of project is going to be the most impactful in the future. And this is kind of this incentive model that I'm really looking forward to see in practice. It's still pretty far away down the line. So now we are focusing on the vaults and how it plugs into different allocation mechanisms.
Yeah, it seems like a good place to start. Well, I think that we're getting towards the bottom of the episode here, and so I'm going to move into my final questions. The first one is there anything that I didn't ask that you want to say? So anything that you feel like we left out?
I think in general, like when we're talking about capital formation and capital allocation, this is like both problems that we're trying to address and from different angles. And in general, a lot of the community teams, Ethereum community teams are working on capital allocation problem. I think in a way it's a catch-22 problem because on one side you need good allocation mechanisms to be able to plug in the capitals. On the other side, like you need to capital to experiment and really see how this allocation mechanisms work. And I just like to highlight that we need to kind of like create this incentives for bringing the capital at smaller scale. So should allow us to then experiment and draw conclusions in more realistic scenarios and how this allocation mechanism works. So we can kind of create a loop to bring more capital because we have a proof of working allocation mechanisms. I think like to the point that Ben mentioned, it's like a tissue between bringing the capital and figure out different allocation mechanisms. It's something Octant working with.
Ben, same question to you. Is there anything that I didn't ask that you want to say?
I mean, I guess the obvious thing is if anybody listening to this is on the accumulation side or has a bunch of capital, if they're looking for more effective and more efficient ways to deploy, reach out to us. You know, probably the best way is at Octant on Twitter or X, whatever you want to call it, Farcaster. Yeah, and that's probably the main, really the only thing I think we missed. Not that we even missed that. It's just an extra thing.
Yeah, I think it's a good call to action to end on. So if you've got a treasury, you're looking to deploy it to your ecosystem, reach out to Octant app on Twitter. All right, thanks for joining me. Alrighty, we just heard from Artem and Ben from Octant. I'm excited about Octant because I think they're legitimately innovating in the market and their technology seems really cool. Also, the lore of Degens, Dungeons and Dragons seems really cool. Thanks for listening. See you on the next one. Bye.